answering your questions about retirement. It's Money Talk with Michael Eastham.
I've heard you talk about investing for income and how the income is more consistent than relying on the stock market. This sounds good in theory, but how does that work if the price of the investments go down? Doesn't the dividend go down also?
Many people have a misconception about investing for income. They assume that just because the market value of your investments goes down, that your income is going to go down. Well, listen, that may be true for certain types of investment vehicles, like certain common stocks that pay a dividend or a value stock. They can change the dividends whenever they want to. And so, yes, you have some risk. One of the ways that you can minimize that risk is by diversifying. And when I say diversifying in an income strategy, I mean things more than just dividend-paying stocks. I mean things like individual bonds or preferred stocks or business development companies, real estate investment trusts. All of those investments are designed to pay a dividend or an income of some sort, including, government bonds and fixed annuities. Those things can pay a reasonable amount of income over time. Now, when you invest in a bond and the value of that bond goes down because interest rates in a current environment go up, does that actually change your income? Absolutely not. As long as the company doesn't default on their debt, then you're going to continue to get that same fixed interest payment throughout the life of the bond. That's why a bond investment is called a fixed income security. Now, that's not true if you own bond funds, because with a bond fund, you don't have a contractual guarantee for an interest payment. You don't have a contractual guarantee for getting your principal back when the bond matures. So individual bonds can provide you that safety, that can provide you that income. So don't be fooled by the folks that say, ooh, there's a bond bubble and the market values are down, and that means your income is going to drop. Not if you invest in income the right way. Same is true with preferred stocks. Many preferred stocks are going to have a contract for a dividend payment. Now, can they stay out there and float a lot longer than a bond? Yes, they sure can. But they could also get called sooner and you would get your principal back if that were the case. So you've got those couple of protections. Business development companies or real estate investment trusts, those can fluctuate, the income can fluctuate, but they typically tend to pay a higher dividend. And they can provide a lot more income in many cases. You just have to make sure that you're careful about the types of investment vehicles that you use in those couple of asset categories. So there's a lot of ways that you can develop a strategy and a portfolio so that your income is very dependable. And dependable income is something that all retirees are looking for, right? You want to replace your salary with income in retirement that you can rely on so that you can go on those trips. You can spend time with the kids. You can travel and do all of the things, pursue the hobbies that you worked so hard for all of your life. We want to help you make sure that portfolio is designed appropriately for you based on the risk levels that you have and the income that you need. So make sure you reach out to us. We'd love to help you make that a reality. Thanks so much for that question.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.